Now, moving on to the shares team. Mark Potter, your time starts now.
Well, thanks so much for having us in, Tim. We're proud to represent the shares team, and we believe we can convince your viewers about the advantages of share investments. I'd like to raise something today which is always a hot topic of conversation at barbecue gatherings. The value of your own home or someone else's home is a favourite topic. What you could have bought X property for 10 years ago, 20 years ago. Wow, people will say, if only I had, or so-and-so had, and he's laughing today. It often convinces people that property is the only way to go. Do we hear about this for share investments? Not so much. People tend to be more private about it. You can't see it like you can their own home, so they're probably not going to brag about it and make you feel miserable. Secondly, the media rarely focuses on what happened 10 years ago in the stock market. They are always reporting on what happened yesterday, and they love talking about yesterday if there was a big fall. So let's have a look at what those investors aren't sharing with you. And let's not speculate. Let's look at some of our best, highest quality companies for something that you don't need a degree or to be an expert in to buy. Number one, BHP Billiton, the world's largest diversified resources group with an outstanding suite of assets. Today, it trades around $40 a share, 20% below its all-time highs. 10 years ago, you could have paid 8. 20 years ago, 4. That's 5 times your money over 10 years and 10 times your money over 20 years, or as we like to call it, a 10-bagger. How about Woolworths? Anybody heard of that company? Today they trade around $26 per share. 10 years ago, they were just around 5, and back to the original listing in 93, 17 years ago, around 260. The result, 4 times your money over 10, 10 times your money over 17, and they're currently 25% below their record highs of 35. How about one more favourite, the Commonwealth banks? Don't berate the banks, I say, buy the banks. Originally floated in 1991 at $5.40, investors are very close to another 10-bagger, with the stock trading at $52. But how about the income? We forecast the Commonwealth Bank will pay $3 per share, fully franked, this financial year. Imagine having bought them at $5.40. How much money are you making sitting on your couch in income, drinking a glass of wine? And what about some other industry leaders? Wesfarmers, Woodside Petroleum, Newcrest Mining, and many other numerous industry leaders, all up tenfold in 20 years. Do you like healthcare related companies? A strong natural growth area. Here you can really shoot the lights out. CSL, Commonwealth Serum Laboratories, the blood specialist, up 44-fold since listing in May 1994, 16 years. Sonic Healthcare, the radiology and pathology specialist company, currently down a third from record highs, but up 200-fold in the last 20 years. The message is clear. You can make big money in the markets by being patient and focusing on industry leaders. Don't be the one saying, if only I had. Be the one who does and enjoy the rewards of the next 10-bagger.
Very smooth, Mark. Very well done. Now, before we get on with the rest of the debate, if I can just remind you, there is an opportunity for you, of course, to vote. Go to TOOP TV and you'll find on our homepage a spot to click on either property or shares. Make your decision over the next few moments' time when you've heard the rest of the debate, and get voting, and hopefully we'll see some big winners shortly. Now, to continue with the debate, the Real Estate Institute's CEO, Greg Troughton. Greg, your time starts now.
Thank you very much. Look, it's an absolute pleasure to be here. I want to get a little bit physiological for a moment. Everyone's heard of Maslow? Maslow's hierarchy of needs. Look, I took the trouble of printing something out earlier. I don't know if you can see that, but down the bottom here is the little house. Everybody needs a house, as my colleague here has basically said, shelter. It is shelter over shares. If you can't see that, we thought we'd bring in the bigger version, just in case. There we are. Look, it's very important that everybody has shelter, and it's not all about the money. We saw the money bags, very, very impressive. But at the end of the day, at 8 o'clock tonight, I can guarantee you we'll all be sitting in front of the TV in our wonderful shelter, enjoying ourselves. That's the first point I want to make. The second point, let's talk about the excitement of the process. You've just woken up, you've looked at the Tizer, there's an auction coming up, you've loved the house, you go down to the house and there's Tim doing his little bit. You go through the auction process, $630,000, $645,000, blah, 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 blah. Any more bids, bang. That always hurts, Tim, but anyway. The excitement of the process is absolutely fantastic. You actually see TV programs of late, Under the Hammer, Hot Properties. Now, what I'd like to propose here is, let's see how much excitement there is. Here is something that I produced earlier. I know you probably can't read it at home, but it's a share certificate. Now let's go through the process of trying to put on a sold sticker to a share certificate. It's not a lot of fun, as you can see. I mean, let's get to the real point of the issue, and that is shelter is incredibly important to us all. Now, having said all of that, I do want to just touch upon some of the pros of actually investing in property. I'd contest that the average punter out there will get a greater return most of the time over the long term than even a very good share investor over a short term. So property is very much a long-term investment, and it should be seen as such. Real estate, we've all heard about it. We've all been exposed to it since we were very young. Mark mentioned before at barbecues. I'd like to contest that every dinner party that I've ever been to, it's always been about politics, it's always been about religion, dare I say it, it's even been a little bit about sex, but the value of property always comes up in the conversation. So where else would you want to be? Sex and property, fantastic. It's tangible, bricks and mortar. We heard at the commencement that it's touchable, so that's fantastic. You can also use it to leverage debt. The banks love property, as Amy has mentioned. They love it to death, whereas with shares, sure, you can leverage it, but let's all dread that margin call that's happened over the last few years. Steer clear of it if you can. And once again, property is a fantastic inflation hedge. I mean, what better way of making sure that your dollar today is worth the same purchasing power into the future? I hear a lot of people say about real estate, well, it's too hands-on, it's too messy, it's too hard. Well, at the end of the day, I say, get a good property manager, give TOOP a call, he'll look after you. It's costly if it's unoccupied. I'd say in South Australia, vacancy rates have been less than 1.2% for a number of years, so it won't go unoccupied. Get into property. It's very important that you have shelter. And as far as I'm concerned, it's not all about the money, it's about the roof over your head.
Well done, Greg. Like the sound of your dinner parties. I'm available anytime you like.